Welcome to the world where money never sleeps and every headline can turn the markets on its head. Today, we're diving into a thrilling voyage through the ocean of global economic events and the high-risk opportunities they present. Whether you're a seasoned investor or a curious newcomer, buckle up for a journey that could redefine your financial future. Have you ever wondered how a central bank's decision in Europe can affect your stock portfolio in the US? Or why a geopolitical conflict on the other side of the globe might be your golden ticket in the forex market? Stay tuned as we unravel these mysteries and more. Let's start by setting our compass straight. Global economic events are the tides that move the vast ocean of financial markets. These include everything from interest rate changes by central banks to unexpected political upheavals. They matter because they shape investor sentiment, influence currency values, and can even rewrite the rules of entire industries. Macro versus microeconomic events. Navigating the financial seas requires understanding two types of currents, macro and microeconomic events. Macroeconomic events are like giant waves caused by global trends or central bank decisions, impacting entire economies. On the other hand, microeconomic events are ripples caused by company-specific news, affecting individual stocks or sectors. Impact of economic indicators. In this vast sea, economic indicators act as our navigation tools. GDP growth, unemployment rates, and inflation are the compass, sextant, and telescope of our financial journey. A rise in GDP signals a robust economy, while high unemployment might forecast stormy markets. Understanding these indicators is crucial for spotting high-risk opportunities. Currency exchange rates and forex opportunities. As currencies fluctuate in this economic maelstrom, savvy traders find their treasure in the forex market. A strong dollar might mean riches for some, while a plummeting euro could spell opportunity for others. In this arena, timing and insight can turn high risks into high rewards. Geopolitical tensions. In the world of high finance, peace and war wield equal power. Trade disputes, conflicts, and political instabilities are not just headlines, they are openings for high-stakes investments. These events can reshape economies, redirect supply chains, and redraw investment maps. Market reaction to economic data releases. The market's reaction to economic data releases can be swift and drastic. Understanding how investors might respond to, say, a surprising inflation report could be key to identifying both risk and opportunity. Here, the line between profit and loss is drawn by knowledge and foresight. Crisis events and market turbulence. Crisis events, like economic downturns or natural disasters, test the mettle of every investor. While they spell uncertainty, they can also lead to high-risk but potentially high-reward investment opportunities. The brave who navigate these choppy waters with skill can emerge with treasure. Global supply chain disruptions. Disruptions in the global supply chain, whether from a pandemic or a trade war, can capsize entire industries. But for the watchful investor, they also create openings in unexpected sectors, from technology to transportation. Economic stimulus measures. When governments unfurl their economic stimulus measures, they can breathe life into certain sectors. Infrastructure spending, for example, could be a boon for construction and materials companies. Identifying these beneficiaries early can be a lucrative strategy. Inflationary pressures. Inflation is a double-edged sword in the world of investing. While it can erode the value of money, it can also mean higher revenues for certain businesses. Spotting the potential winners and losers in an inflationary environment can set you apart in the investment race. Trade agreements and tariffs. Trade agreements and tariffs are the chess moves in global economics. A new trade deal can open up markets and create opportunities, while tariffs can protect domestic industries but also escalate costs. Understanding these dynamics is key to finding high-risk, high-reward plays. Technology and innovation trends. Economic events often drive technological innovations. From renewable energy to biotechnology, these trends can open up new investment frontiers. For the investor with an eye on the future, these sectors offer exciting and risky opportunities. Debt crises and sovereign risks. Debt crises and sovereign risks are like storms on the horizon for bond markets and currency trading. Countries grappling with debt might offer high yields, but with higher risks. Astute investors can find value here, but it requires navigating complex waters. Global economic forecasting. Keeping an eye on global economic forecasts is like having a map of uncharted territories. These projections can guide investors towards sectors or regions likely to experience growth, helping identify high-risk opportunities before they become mainstream. Long-term versus short-term investing strategies. Global economic events affect short-term traders and long-term investors differently. While a trader might seek quick gains from market volatility, a long-term investor might look for opportunities to buy quality assets at discounted prices. Both approaches require different strategies and mindsets. Risk management and high-risk opportunities. In the world of high-risk opportunities, risk management is your lifeboat. It's essential to have strategies like setting stop-loss orders and diversifying your portfolio to mitigate potential losses. Even the boldest investor needs to know when to cut losses or take profits. Quantitative easing effects. Quantitative easing, a tool used by central banks to inject money into the economy, can have far-reaching effects. It can boost stock markets and lower interest rates, but also potentially create asset bubbles. Understanding these dynamics is crucial for investors looking to capitalize on these conditions. Economic indicators: leading versus lagging impact. Differentiating between leading and lagging economic indicators is like knowing the weather forecast versus reading last week's weather report. Leading indicators can give you a glimpse into the future of the markets, while lagging indicators confirm what has already happened. Global economic events and cryptocurrency. The cryptocurrency market, with Bitcoin and others at the helm, is increasingly sensitive to global economic events. From regulatory changes to economic crises, these events can cause dramatic swings in crypto prices, presenting both risks and opportunities. Sectoral analysis. Diving deep into sectoral analysis, we see how different industries react uniquely to economic events. Whether it's technology, healthcare, or manufacturing, each sector has its own set of risks and opportunities. Understanding these nuances can guide targeted investment strategies. Market sentiment and economic events. On the other hand, market sentiment is the mood of the financial world, and it's deeply influenced by economic events. Investor psychology plays a critical role in market movements, and savvy investors can read these emotional tides to predict market directions. Global economic events and sustainable investing. Sustainable and ESG investing is not just a moral choice, it's increasingly a financial one. Global economic events often direct attention to environmental and social issues, creating opportunities in green technology, renewable energy, and socially responsible companies. Global economic events and personal finance. Finally, let's bring it all back home. Global economic events can have a profound impact on personal finance. From adjusting your investment portfolio to considering high-risk opportunities, staying informed and adaptable is key to navigating these turbulent financial waters. Thank you for joining us on this journey through the complex and exciting world of global economic events and high-risk opportunities. Remember, in the vast ocean of finance, knowledge is your most valuable asset. Until next time, keep your sails high and your compass true.